The Toronto real estate market continues to play hard to predict. On one side, interest rates might be coming down next year. On the flip side, banks are now revising down their real estate forecasts. Now, even though we can't tell the future, we can share what we have seen and analyzed so far so that this can help you piece together what we might expect for Toronto real estate in 2024. If you're new here, I'm Samantha Chan from Elevate Realty, and our brokerage wants to help you make smarter real estate choices in Toronto. Don't forget to like and subscribe if you enjoy our content. Let's begin. In 2023, rents in Toronto went through the roof, but recently we have seen them start to level off. And this to us does make sense because interest rates, which do play a big role in terms of where rents go, are also starting to stabilize. Now, even if rates start to come down in 2023, we do predict that rents in Toronto will stay more or less stable. Why? Well, first of all, we're not going to see substantial drops in interest rates. And two, the Toronto supply and demand dynamics, thanks to our high immigration goals and diverse economy in Toronto on the demand side and limited rental supply, are probably going to continue to support rents in Toronto. Just note that this situation might be a little bit different outside of Toronto, so definitely keep this in mind. The second thing we think is that as we see lower interest rates next year, we will see a growing preference for variable rates from mortgage holders. Now, let's be clear, we're not trying to predict where interest rates go, and we will definitely defer this to the forecast from our big banks and economists. So right now, consensus does tell us that interest rates will start to come down by mid-2024 with inflation easing and signs of a possible recession in the GDP and jobs numbers. At this point, the current fixed mortgage rates are considerably lower than variable mortgage rates. So right now, it might still not make sense to go variable. But as interest rates start to fall and the spread between fixed and variable rates do get closer, we do suspect that more and more people continue to choose variable rates moving forward to take advantage of potential lower rates down the road. Now, the third thing we think might happen in 2024 is that the rental cap rates will come down a bit as interest rates start to fall. There is a historical connection between rent yields and interest rates. The idea is pretty straightforward. If interest rates rise, then rent yields do need to go up too to make sure investors are still making money on their rents. Now, real estate investors do measure rent yields with something called a cap rate, which is basically calculated by subtracting operating expenses like taxes, insurance, and utilities from gross rents, and then dividing all of this by the property value. When fixed mortgage rates were peaking at 6.3% up until early November of 2023 this year, we were looking at cap rates of 6% just to break even on cash flows with a 20% down payment. Now, break-even cash flows is something that a lot of investors are comfortable with since they don't need to fork out extra money out of pocket to support their investment each month, and they do profit from monthly principal paydown and also benefit from long-term appreciation. If fixed rates drop down to 5.5% by mid-2024, then cap rates might have room to drop to 5.5% as well, just to keep the same break-even cash flows. Now let's move on to the next thing. We think that the best way to grow your investments is by investing where the government is investing in. Right now, all levels of government in Canada are focusing on missing middle efforts, balancing density out by adding more units, hopefully, in houses where the population is dropping to even out with the increasing density caused by condos downtown. Now, because of this, we are seeing a lot more policy changes on the low-rise front, especially in Toronto. Think laneway houses in 2018, garden suites in 2022, multiplex rules in 2023, and next they're giving the green light to rooming houses next April in 2024, and there might even be an extra initiative to allow more units created in houses on main streets next year too. Now, when you convert a house into a multiplex, rent yields will be visibly better, and as more news outlets continue to report these changes, we do expect more interest in investing in houses, and this will probably mean faster appreciation in the low-rise market too. Moving on. Investors are probably going to place a higher emphasis on rental income rather than just hoping for property values to go up. Now, this change in approach is probably because we do expect interest rates to stay higher for longer than usual, which might slow down how much home prices have been going up historically. Now, in today's market, the best returns for rental income in Toronto are expected to come from multiplexes that are semi-detached homes. These houses do cost less to get into compared to detached homes, and yet you can earn the same amount of rent compared to detached homes. So if investors do want max rent yields, these type of homes are probably top on their list. Now, I talked about it earlier. The news is saying that we might see bigger real estate drops than previously expected. And TD is actually saying that prices at the lowest point will be 15% higher than what it was at pre-pandemic. So what this means is that in Canada, prices will still have room to drop. But note, prices haven't been coming down at the same rates across Canada. In Toronto, we're definitely closer to that point, and in some neighborhoods in Toronto, prices have already dropped below that. In general, Toronto real estate demand has slowed down a lot since summer. So if history does repeat itself, we might end up seeing more people wanting to buy homes in the new year in 2024. So once you add this to the lower fixed rates lately, there is a chance that prices could go up again. Now let's break this down through an example. Fixed rates were at around 6.3% until early November of 2023, and we mentioned earlier that cap rates would need to be at 6% just to break even. Now lately, bond yields have been dropping and fixed rates have followed that trend, and these days, fixed rates have come down to 5.7%. But at the same time, the market has been slowing down for the holidays too, so prices haven't really budged that much, and that's why cash flows have been improving quite a lot. Now, looking ahead, if investors continue to expect break-even cash flows at our current lower 5.7% fixed interest rate, cap rates can come down to 5.6%. And then if fixed rates do come down to 5.5% by mid-year 2024, and variable rates end up settling at the same 5.5% by year-end 2024, this means that we can potentially see prices come up by 10% from today's values. Most real estate investors aim for at least break-even cash flows on their real estate investments. But in our current slower market, some properties these days are making much better cash flows because interest rates have adjusted lower, but buyers haven't caught on yet with the prices. So what this means is that it does give buyers who are ready to invest today a chance for better deals and better cash flows before prices catch up with the lower fixed rates that have come onto the market. If you want to see what deals look like these days before more buyers come back to the market in 2024, we can guide you to our top picks in the Toronto real estate market. We're not your typical real estate sales brokerage. Instead, we do focus on numbers to make better real estate decisions in Toronto. This can mean looking for stronger investments with positive cash flow, thinking about risk management, and looking for ways to boost returns like value-add renovations and gentrifying areas. If you do want to discuss your private real estate situation with us, just go to this link here to set up a time to chat. You can also check out more content on our website or find us on social media. And if you haven't done so already, please like, subscribe, and share this video if you think anyone else might like it too. Thanks so much for watching, and I'll see you in the next video. Bye.